When people throw around the term expatriation and expat, it's important to note the difference in how it impacts U.S. taxation. So, when a person formally expatriates from the United States, that's the process of expatriation. Uh, for taxpayers who are long term lawful permanent residents or U.S. citizens, there's a complicated process involving filing an 8854 and determining whether they're a covered expatriate and whether they have exit tax. Once you expatriate from the United States, you're no longer subject to U.S. tax on your worldwide income. If you're covered expatriate, there might be some lingering tax issues. If you have U.S. sourced income, you still have to pay taxes on your U.S. sourced income, but for the most, unless an exception applies, but you're not taxed on your worldwide income. Alternatively, for taxpayers who are like U.S. citizens, lawful permanent residents, and they just move abroad, then they could be considered a U.S. expat because they're living outside of the United States, but they're still subject to U.S. tax on their worldwide income unless, for example, they make a treaty election to be treated as a non-resident alien for tax purposes. So expatriation is the formal process of terminating U.S. person status. Being an expat just means you live overseas. If you're an expat, you're still subject to U.S. tax on your worldwide income unless an exception, an exclusion, or a limitation applies.